Welcome to Mad Money. Welcome to Cramer. Okay, friends, I'm just trying to make a little bit of money. My job is not just to entertain, but to put it all in context, do some educating. Call me, 1-800-743-CNBC. Tweet me, at Jim Cramer. Do you know that the fate of today's market was decided at 12:30 a.m. Eastern Time? Yeah, middle of the night. That's when Taiwan Semiconductor, the biggest chip manufacturer in the world, reported one of the strongest quarters I have ever seen. That's when we learned in a definitively bullish conference call that the artificial intelligence doubters may have no idea what they are talking about when they keep talking about a bubble. Because demand for these AI chips is off the charts. That's when we found out that the only company with real insight into the long-term demand for advanced semiconductors just can't make enough of them fast enough. Taiwan Semi actually spent more than $50 billion just to keep up with its current orders. Its stock was up about $20 before most of you woke up. The rest of tech, all part of the lure of the day, where the Dow gained 293 points, S&P advanced 0.26%, NASDAQ rose 0.25%. I have to tell you, though, they were much higher before an afternoon pullback, related, yes, of course, to where interest rates are going to be and whether they're going to be chopped, which I keep telling you is a sideshow if you want to make big money. Tech wasn't all that flew today. After staking up the joint for a couple of sessions, the banks rebounded because of beautiful, pristine blowouts from BlackRock, from Goldman Sachs, my alma mater, and Morgan Stanley. We're going to go into those in a moment. But make no mistake about it, that conference call from the other side of the world, the one thrown by Taiwan Semi, the company that physically turns the blueprints into semiconductors, changed this entire market. More specifically, it changed the way this market views the most important, largest company in the world, the elephant in the room, that is NVIDIA, which had been down for 2026 until last night, when so many other less modern chip makers have seen their stocks soar. And that's what made this session so encouraging for those of us who like technology stocks. See, until just after midnight when Taiwan Semi reported, the new narrative had become you need to steer clear of the AI stocks, especially NVIDIA, which had become known as what we use the term over-owned, meaning that too many institutions already owned it, so there were no new buyers of any size. Everybody had it already. The only stocks that have been working this year are the so-called commodity chip makers because of a severe shortage of semis that store data. These are so-called memory chips. No one thought that these low-tech chips would ever be needed in such high quantities. But data centers can't get enough of those things either. And there aren't enough machines available to make more of them. That's why SanDisk is up 72% since the beginning of the year. Western Digital up 29%. Micron up 18%. Seagate up 16%. Everything they make is in short supply. Customers are desperate. Meanwhile, NVIDIA stock is flat. So these outsized gains taunted the Prometheus of our time, eagles feasting on the liver of the chained NVIDIA giant. I just like that imagery. Until today, that's because NVIDIA is Taiwan Semi's biggest client. So if business is as fabulous as they say, and there's no reason to believe otherwise, then business must be pretty darn good for NVIDIA, certainly better than expected. The stock closed up 4 to 187, 1 point had been 189. AMD caught a bid too, as we say, and Taiwan Semi's good fortune is terrific news for the semiconductor capital equipment makers. The companies that supplied Taiwan Semi and the other foundries, I think ASML, that's that big European company of $500 billion. KLA, Applied Materials, ooh, that's hot, and Lam Research, LRCX. These all rallied like crazy today. We used to have a ton of these semiconductor capital equipment plays, but they all merged, and when demand is this type, whoa, they can make fortunes. Just as important, Taiwan Semi made mincemeat of the skeptics who've been doubting AI's staying power. They said something we have only heard from Jensen Huang, CEO of NVIDIA. The demand is insatiable. More important, the profits, they could be humongous for the customers. The companies we call hyperscalers aren't wasting their money when they spend billions on data centers, according to Taiwan Semi. They're finding money everywhere. They're making it. They're making it on the data centers, despite what we keep hearing. Taiwan Semi says the more they spend, the more they make. Remember, Jensen told us that, but no one's believing him? The gating factor here isn't even supply. It's the darn electricity shortage. The hyperscalers want clean energy. They want nuclear and shun natural gas, even at $3 a throw. They put up data centers all over the place, setting the price of power higher. They don't seem to understand that they'll have to go hat in hand to GE Vernova to beg them to give them more gas turbines, because building a new gas plant is much, much faster and cheaper than building a nuclear power plant. When I listened to the Taiwan Semi call, I realized that One of these hyperscalers is going to break ranks, maybe buy some natural gas companies in Texas and Pennsylvania, start building huge numbers of nat gas power plants right next to the natural gas wellhead. That's what I'd do if I were in charge. I told you earlier this week that we needed to see the banks reverse, right? Remember? Because that's the best leadership group in the world, and then suddenly it's been really bad ever since JP Morgan reported. Well, guess what? We saw it happen today. Goldman Sachs, Morgan Stanley, BlackRock broke the downturn precipitated by allegedly weak quarters from Morgan, Citigroup, Bank of America, and Wells Fargo. It takes a lot to get these stocks out of their tailspin. And we got a lot, with Goldman Sachs putting up phenomenal numbers across the board. Morgan Stanley continuing to be a juggernaut of corporate finance and asset gathering. And BlackRock taking in just trillions to the point where they now manage an astounding $14 trillion. Yes, that was AT. Last night I lamented that the market seemed to be led by big pharma and the oils. Those are terrible generals. A healthcare rally signals a weak economy, and oil rally signals inflation. Worst possible combo, stagflation. My hope was that the JP Morgan Healthcare Conference was causing pharma to temporarily levitate, and the president's rhetoric toward Iran, was going to get hotter. It got cooler. So both catalysts fizzled. I said I wanted to see these minor chords recede and the major chords come back. I wanted the money flowing back into tech and some consumer stocks, retailers, coupled with a ramp up in both data centers and non-data center industrials. And today we saw exactly that. The major chords return. Plus, we had a monster move in the small caps as Russell 2000 broke out with space, alternative power, Bitcoin variables, and, of course, quantum computing and nuclear power adjacencies all back in the win column. Now, there's some excellent news here. Let me give you some examples, because I hate just saying that, Russell this and S&P that. I like the resuscitation of the restaurant stocks. Starbucks and Texas Roadhouse, two charitable trust names. Look, they were on the brink. Seasons on the brink not that long ago. Now they're breaking out to the upside. What else? Housing stocks are moving up. Not long ago, after getting hit with mass downgrades, there's a thaw going on as supply has arrived to quell demand. Home prices are at last coming down. Many of them to 2019 prices. Toll Brothers, Lennar, Horton led the group higher. The same, by the way, was, how about this? Home Depot rallied again, only to be outdone by Lowe's, which hit its 52-week high. Congratulations to Lowe's CEO Marvin Ellison for that achievement in this god-awful environment. But the turn in NVIDIA, which had become an eyesore of this market, is what gives me hope that the bubble talk may have finally run its course, at least for the moment. One listen to the words of Taiwan Semi, one gander to the transcript tells you that it's worth buying Meta, as social media was caught up for a strength, as well as Apple, which was down today, because expensive phones were noted, too, as having great strength. Look, Apple's stock has done nothing. That worries me. It worries me that the buyers haven't figured out to buy it yet. These stocks have done nothing lately. Same goes for Broadcom, which is linked to Taiwan Semi 2. That stock rallied $3. Maybe today was the day it started. What's really happening? Well, here's the bottom line. To me, you're getting another chance to buy these high-quality stocks before they take off in the face of the doubters who didn't get up early enough to hear the Taiwan Semi call. As for the rest of us, we knew it would be a good day at 12:30 a.m. last night. Would you mind if we got some sleep tonight? Shelley in West Virginia. Shelley.
Hey, Jim. I love your show as always.
Well, thank you, Shelley. What's going on?
My question is on ARM Holdings.
Yeah.
I've had this position for a while, and it's taken a beating. Do I just go ahead and add more, hold it, or sell it? Do I buy more?
I got to tell you, something's going on. I mean, we got to get Renee Haas on. I mean, the stock has just been in free fall, and that's not right. Maybe it's because the price earnings multiple got too high. I would hold it. I can't tell you to add any until we find out definitively that isn't SoftBank selling its stake or something, because, man, this thing's been nasty. All right, let's go to Mark in Illinois, please. Mark.
Booyah, Jim. Good to see you back on Squawk this morning.
Oh, yeah, it was nice to be back.
And Carl got great chemistry.
But you know what? We do have great chemistry. I dropped chemistry because it was going to ruin my transcript, but I've got it with the show. How can I help?
Listen, I was calling about Starbucks and a competitor that I've seen pop up in my neighborhood, and I looked into it, and the place is like off the chart. As a matter of fact, they got more places popping up than the cheese graters at a Bears game. It's called it's called Seven Brews, and the traffic in
Seven Brews.
I've seen several.
Seven Brews for Seven Brothers.
No,
all right. Well, let me retort. let me retort with the fact that I think that Brian Niccol is going to pull off this turnaround. At one point, Starbucks today was all the way up to 94. It finished at $93.28. It's been a slow, step-by-step, inch-by-inch move from the 70s, but it's coming back up. I hope that the Seven Brothers, the Seven Brews, the Seven Brides, whatever, is doing well. But I got to tell you, my choice is Starbucks. 12:30 a.m. was when everything changed for today's market. Thanks to TSMC. Can we get some sleep tonight, please? Oh, man, money tonight. We've got really unbelievable earnings for the big banks. Now, is it time for the regional players? Interesting. I'm sitting down with Memphis-based bank First Horizon to hear all about the company's latest results. Then yesterday, a viewer pointed me in the direction of a centuries-old company whose stock has been quietly soaring lately. I'm digging deeper into the tale of Babcock and Wilcox and give you my take on the storied name. And as identity protection comes front and center for companies in the age of AI, I'm checking in on the cybersecurity stock of Rubrik with a stock that's been much worse than how the company's doing. Let's see how they're protecting you. I want you to stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
When we get earnings from those big national banks earlier this week, Wall Street was not impressed, okay? The whole sector got hammered. Now, though, we're starting to get numbers from the regional banks, and they're doing better. Take First Horizon, Tennessee-based bank that reported this morning. Even though the stock had rallied more than 50% from its lows last April, it still tacked on another 1.6% gain today. Why? Because the numbers were that good. So can this stock keep rolling as the new year unfolds? Let's begin with Brian Jordan, the chairman, president, CEO of First Horizon, old friend of the show. Get a better sense. Mr. Jordan, welcome back to Mad Money.
Thank you. Thank you for having me.
All right, so Brian, didn't skip a beat. This was the kind of quarter I like. Expenses under control, revenues growing, area really sound, and you used a phrase I'm going to use from now on. People are generally biased for growth. What does it mean to be biased for growth?
Well, it's not a term of technical, it's a term of art. And we survey our customers on a number of different ways, and I spend a lot of time with customers. And everybody I generally run into is looking for opportunities to invest, to buy, build, or expand. And I think if we can get the uncertainty to a lower level, then I think you really see this economy take off. I think there's a great opportunity for us, and I'm hopeful that the benefit of the One Big Beautiful Bill this spring will actually accelerate the growth in the economy. Well,
I mean, people may confuse exactly your footprint. We're talking about the whole Southeast, which I guess is just seeing everything from data centers being built to a lot of people coming in. I was thinking of you when they talked about the billionaires tax in California, and I think that, you know what, I'm going to run to Texas, I'm going to run to Florida, I'm going to run to First Horizon. Are you seeing people who are basically migrants, people coming from other areas of the country into your area because they know that you can expand and the government's got your back?
Yes, absolutely. If you look at the U-Haul destination list, Nashville is always near the top of that list. Tennessee is a tax-free state, income tax-free state, right to work, great laws, and great business environment. And you've got great climate, great resources in terms of human capital, transportation, and it has been a real magnet for the state. And we've seen a number of headquarters located here over the last several years.
Now, we were looking at some of the things that make it so that things are much better than expected for yours. And this growth in loans to mortgage companies. Now, I always thought that the mortgage market was not so hot. And then I read how you're doing, and maybe it's a regional thing.
Yeah, it's a combination of things. For us, that is a national business, and there has been a lot of shift in the market over the course of the last 18 months. And we picked up a good bit of market share, and we've picked up greater line utilization because of that, people exiting the business. What really started to happen late in the fourth quarter and surprised us a bit is refinance activity picked up. As you know, people with the last couple of years wanted to get the 2% and the 3% rates, and they haven't been available, so people have had arms. And as the 30-year mortgage has approached that 6% area, we started to see people refinancing and buying mortgages at that lower 6% area and getting out of arms. So it's not a big wave at this point, but activity did start to pick up in the fourth quarter. We saw it in our warehouse business, and we saw it in our mortgage origination business.
Now, I want to ask you something because I know you're not a biased individual. I keep reading that the data centers are being built all over the country. People don't want them anymore because they jack up the electric prices. You've got areas where there's tremendous data center expansion. Are you seeing that, or is that just some sort of thing that people are using to slag these guys?
Yeah, we're seeing data centers built 2 miles from where I'm sitting right now. XAI has built a huge facility, and it's probably at 20 to 30% of the capacity that they will ultimately build. We're seeing across the footprint, and it does put some pressure on water and electricity, but at the end of the day, the community seems to be very, very open to having those investments and the tangential or follow-on investments that vendors and providers will bring once the data centers like XAIs are finished.
All right, let me follow up on that. I was going to go another way, but I got to just stop because this is really important. You just said, I'm going to repeat this, you basically just said that they're a net positive, not a net negative, which makes me think, given how big your footprint is, that perhaps we're getting a little too negative about the idea of having new data centers.
Yeah, I think they're a very much a positive. It's clearly going to require some investment in infrastructure, but that's going to be required anyway. So it really does bring economic growth to the communities. And here in Memphis, the growth dynamic that has been created around XAI is tremendous, and we're very, very excited about how that's playing.
All right, thank you for that, because you're the first person to say it, and I thought it was the case. Honestly, I thought it was the case because I talked to the guys who put them in, and they were saying that. Now, let's go back to what you were talking about in terms of people feeling better. Now, nationally, we have a new administration. Obviously, it is really not. I'm not going to say it doesn't like regulation. I'm going to say it's deadly anti-regulation. Is that an attitudinal thing that gets your area, or is it just, frankly, less enforcement of regulation that might be onerous to business?
Well, I think there's clearly a much better environment for lower bureaucracy or red tape when it comes to making decisions or investments or acquisition. It's very clear in the banking industry, and you've seen that drive consolidation over the last 6 months in our industry. But it's generally true across all sectors of the economy, and efforts to change environmental permitting and things of that nature, which seem to be taking root and growing, is going to be very, very effective in driving growth over the next several years.
But can your new companies find workers? We keep hearing that kids not have enough families that are having kids. We're running out of people, so to speak. We stopped immigration. Can these companies find people to hire?
We may have a longer term problem, and we'll have to figure out, I think, how we balance out the needs for workers and balance it out in a smart immigration system. But in the short run, with the use of technology, with the use of automation, and the great workforce and the in-migration we have in our footprint, there's not been a tremendous amount of contention for human resources in terms of staffing open positions.
Well, I knew you'd be a breath of fresh air. You've been with us consistently. I know when things are bad, you say, hey, look, things aren't that great. Other people are always reluctant to do that. So you have every right to be able to say when things are great. I want to thank Brian Jordan, who's the CEO of First Horizon. Thanks for coming on, Brian. It's great to talk to you.
Thank you for having me.
Absolutely. Mad Money's back in for the break.
Coming up, last night you caught Cramer's attention with this energy technology stock. Now he's returning his homework with some extra credit. Next.
last night I got this call from Jim in Rhode Island, who served in the Navy, thank you, who wanted to know about Babcock and Wilcox. I told him it's a great speculative play on the construction of power plants. But the stock's had an insane run. It's up over 30% just since the start of the year. So I recommended waiting for a pullback before you do any buying. But after the show ended, I couldn't stop thinking about this Babcock and Wilcox. I remember from the old days. The small industrial company was founded only a couple of years after the Civil War. Yeah, the actual Civil War. They made boilers for Thomas Edison and the New York City subway. They were involved in the Manhattan Project, too, which is how the company got involved in the early development of nuclear energy industry and ended up making components for nuclear-powered submarines. That was Babcock and Wilcox's main business unit until it was acquired by rival construction company McDermott in the 70s. About 25 years ago, this company was forced into bankruptcy thanks to a wave of asbestos lawsuits that troubled many of these companies that were in construction. In 2006, it came out of bankruptcy and merged with another McDermott subsidiary, BWX Technologies, before being spun off as the new B&W in 2010. Now, 10 years ago, Babcock and Wilcox split again. This time, you with me? It spun off its commercial power business as Babcock and Wilcox Enterprises. And that is the company I got a call about last night. While their defense and nuclear business changed its name to BWX Technologies. And I got to tell you, I think both of these companies have a lot going for them these days. I just wish the darn stocks weren't so high. Look, it wasn't always the case. Babcock and Wilcox peaked at $110 in 2016. That's adjusted for a 10-for-1 reverse split, by the way. And its stock then sunk to well below $1 at its lows early last year. Back then, a lot of people were worried that this business might be headed for bankruptcy. Last April, it sank to 22 cents. 22 cents, where it was at risk of getting delisted. Since then, though, Babcock and Wilcox has caught fire. Get this, it's rallied 3,600%, 3,600% from its lows to $8 and change now. You know what? That created a lot of penny stock millionaires. Why the renaissance? First, the company sold some assets to raise some cash, bought back some debt, avoided delisting, and stayed in business. Then in the fall, they announced a deal that would give the company exposure to the AI data center space. I don't want to get too lost in the details. This story's tough enough already, huh? But one of the things that this new iteration of Babcock and Wilcox does is help convert old, dirty coal-fired power plants into new, relatively cleaner natural gas plants. And most of the tech companies building data centers want relatively clean energy if they can't have nuclear. Since then, there's not enough of that to go around. Natural gas is often the best thing they can do. So that deal instantly made Babcock and Wilcox a sexy new data center play. And the stock, it soared. Of course, most of the data center adjacent plays peaked last October and then saw their stocks get hammered over the next couple of months. Remember, that was the end of the year of magical investing. This one, though, avoided that. It just kept charging higher. Some of that's because when B&W reported in November, they posted a huge increase in their backlog from all this data center business, and they announced this $1.5 billion deal with Applied Digital, which is one of the many cryptocurrency miners that's pivoting to become a neo-cloud company. This is the first time B&W is installing a power plant for a new data center rather than just doing coal-to-gas conversion for older ones, so it was pretty good reason to buy the stock. In the end, though, the stock's had a pretty extreme run. While Babcock and Wilcox is racking up a lot of new business, which is impressive for a company with a $923 million market cap, it's highly speculative. It certainly doesn't help that this company's currently losing a lot of money, still has a lot of debt. Plus, there are big projects, and we don't even know if Babcock and Wilcox can deliver. So it's worth your attention, but I wouldn't buy it, even for speculation, until the stock cools off. And remember, October of last year, they cooled off. Now, what about this BWX Technologies, the nuclear and defense company that used to be under the same corporate umbrella as Babcock and Wilcox? Intriguing. This is another stock that caught fire in recent years because of the newfound interest in nuclear energy that you all know about now. BWX gets about 80% of its sales from the government, mostly from the Navy. They do design, engineering, and manufacturing for nuclear components, reactors, and nuclear fuel for nuclear-powered aircraft carriers and submarines, where Jim worked while he was in the submarine when it was previous when he called. But this was what I thought was his true interest. I thought this would be the division that he would like. This company also has a commercial business that's connected to civilian nuclear power plants. BWX has really cleaned up over the past few years. In 2024, the Navy rolled out a 30-year shipbuilding plan that included a lot of investment in nuclear-powered subs and aircraft carriers. That's decades of growth for these guys. Meanwhile, the commercial nuclear industry has come back from the dead thanks to all of these power-hungry data centers. In its latest quarter, BWX's government business put up 10% revenue growth, and its commercial business was up to 122%. Because these projects are so long-term, a lot of visibility into the company's growth many, many years into the future, and the long-term earnings are looking pretty good. Of course, a lot of that's baked into the stock, though, which was, again, look at this. It rallied from $76 at the end of 2023 to $213 today, including a 23% gain since the beginning of 2026. Another parabolic move. At these levels, BWX trades at nearly 50 times this year's earnings estimates. That's too rich for me. Good story, but you need to wait for a major pullback or rapid acceleration in BWX's earnings growth to justify the sky-high valuation. Finally, look, while we're on the subject, you know what? Let's do this. Let's highlight some of the top defense contractors in the shipbuilding space, because that's good for BWX, right? All right, two stand out here. First is HII. That's the old Huntington Ingalls Industries. That's the nation's largest military shipbuilder. They're the sole designer and builder of nuclear-powered aircraft carriers and one of only two companies that makes nuclear-powered submarines. Not bad, huh? They've also got a rapidly growing business making drones for the Navy. But look, Hill, up 80% last year. Even at this levels, it sells for just under 24 this year's earnings estimates, though. And that's pretty reasonable, given that the company's earnings should grow at a 16% clip. HI, I like it. Then there's the other company that builds nuclear subs, General Dynamics. This is a big diversified defense contractor, so it's less of a pure play on shipbuilding. They even got a commercial aerospace business, that Gulfstream. Still, the stock rallied 28% last year, and I think you could have more upside in a world where the president is talking about a 50% increase in defense spending. Stock trades at 21 times this year's earnings estimates. It's not that pricey, given that General Dynamics should be able to put up 12% earnings growth this year. Both of these are cheaper. Here's the bottom line. When Jim Rhode Island called about Babcock and Wilcox last night, it sent me into a rabbit hole, maybe a warren, of nuclear-powered shipbuilding. Babcock and Wilcox is pure speculation. I think it's too expensive for the moment. BWX, much less speculative, also very expensive. HII, if you want nuclear-powered ships. And I got to tell you, General Dynamics right now, I think maybe I should put it in the charitable trust. I got a big meeting next week. It's a club meeting. And I you know what? There's so many stocks that I'm intrigued in right now, but I would have to sell something to buy General Dynamics, and I can't think of what to sell. Stay tuned next week for more information. Why don't we go to Greg in my home state of New Jersey? Greg.
Hey, Jim, good evening. Enjoy the show.
Oh, thank you, Greg.
Love to get your opinion on Texas Pacific Land. Purchased some stocks over a year ago, just split 3-for-1, and they also just let Bolt Data and Energy in the door with them. The former, I guess, was Google CEO, that Eric Schmidt.
Right.
Love to get your opinion on that stock, pal.
Well, you know, look, we recommended the stock a couple years ago. We had a good run. We're not inclined to like the oil stocks this year. We just think that the president wants oil down. And this president seems to get a lot of what he does want. I'm not going to get in the way of him and his $50 price target for oil. Let's go to David in Florida. David.
Booyah, Jim. How are you?
Booyah. I'm good, David. How are you doing?
Good. I'm calling about an energy company that has had very strong earnings the past multiple quarters, and it was just upgraded yesterday from Jefferies. I've heard you talk about them a lot. Do you still like GE Vernova?
You know, I'm glad you mentioned GE Vernova. I hit it up today. I saw it was down. I say, that's ridiculous. This company is on fire. What does GE Vernova do? Well, it does natural gas turbines, and it does nuclear. And I think it's ridiculous that the stock is down since the year began. It is and we own it for the charitable trust. It's one of my absolute favorite stocks. All right. Unfortunately, I think Babcock and Wilcox is just pure spec at this point. But there are others in the space that stand out to me. I'm glad I took a deep dive into the sector. I wanted you to know more than just B&W. Now, much more made money, including my suits with Rubrik. How can companies stay ahead of the curve when it comes to cybersecurity these days and when they break into your place? I'm getting all the latest with the identity providers' top brass, the ones who insure your business. Then I think, well, not technical insurers, but when you hear it, you'll know. Then Goldman Sachs, Morgan Stanley, how about these two? I think they're getting unfairly punished by the market after their quarters, even though they're up today. I'm taking a step back in time to give you a little perspective about these stalwart institutions. And, of course, all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer. sometimes you report a truly great quarter, your stock soars. And then a few days later, it comes right back down. Take Rubrik, the data security company that turned in a blowout quarter a little over a month ago. It's a huge beat. That sent the stock legitimately flying from 70 to 86 the next day. Then it charged higher for the next couple of sessions for peaking at $92 and change. Since then, though, Rubrik's pulled back hard, coming down to around $69 today, meaning you're basically getting that fantastic quarter for free. So is this an incredible buying opportunity, or do the sellers know something we don't? Let's take a closer look with Bipul Sinha. He's the co-founder, chairman, and CEO of Rubrik to find out more. Mr. Sinha, welcome back to Mad Money.
James, thank you for the opportunity.
Of course. Now, Bipul, that quarter was amazing, and it said to me that you'd be nuts not to have your kind of program, because especially once they're in, if they take it in, you're kind of a dead man without your stuff. Is that too extremely positive?
I mean, if you look at the last several quarters, ever since we became a public company, we have been producing great numbers, and last quarter was our greatest ever. Look, I'll leave the stock and the stock price to the experts of the market, but we are into an exciting market. I mean, if you think about data is the engine for AI, and Rubrik is a data company. We are helping businesses accelerate their agentic AI journey. And finally, we have an exciting platform with multiple products. And as you said, we help businesses keep their services up and running even when they had a successful cyber attack.
Well, I look at things to see maybe something's wrong. I said, geez, maybe Okta, which does identity work, is taking share, but it's the opposite. You're partners with Okta.
We are a big partner with Okta. We are a big partner with Microsoft Active Directory because we are helping these directory services up and running even when they had a cyber attack, because after all, people have to log in after a cyber attack.
Well, let's go over, I like your approach of let's not determine the market yet. Let's determine what you're doing for companies. I get in through the typical port. I log in, somehow I get it. I then try to shut down the entire system. What can you do to protect that?
What we do is we keep the copies of your most mission-critical applications in Rubrik. And when your system is shut down because of cyber attack, human error, natural disaster, we copy the data back into those systems and bring those systems up and running. The speed of clean data delivery is the Rubrik's core business. And now with Rubrik Agent Cloud, we are also helping businesses deploy and secure agentic AI.
Now, how dangerous is agentic? I keep hearing, first I heard it was the greatest thing in the world, but then I heard that it's a terrific way to imitate and therefore exploit. So, I mean, what were we doing putting these things in that seemed like a natural cyber attack vehicle?
I mean, you heard their stats that 80% of AI projects are not getting into production. The biggest risk factor is governance, monitoring, compliance, and ability to undo bad actions. And that's where Rubrik comes in. We have a full suite of solution which does agent monitoring, agent governance, so that there's a guardrail and they don't take bad actions. And if they do bad actions, then we undo it. And think about this is a passport for everybody to fly in the agentic world.
Now, you do get business from at the expense of other companies, but they tend to be what you call legacy companies. So what does that mean to people who are thinking, well, I don't know any legacy companies?
If you think about Rubrik, what we are doing in the marketplace is what ServiceNow did to ITSM.
Okay.
So ServiceNow took the legacy ITSM and transformed that into a workflow platform to deliver digital transformation. We have taken the backup and recovery, which is a legacy product for business continuity in case of natural disaster, and transformed that into a data security platform to deliver cyber resilience, which means that even when you have a cyber attack, your businesses are running. You can deploy agents with confidence.
Okay, so a lot of people are feeling that these software as a service companies are all being lumped together. So you have Atlassian going down, ServiceNow going down, Salesforce going down, Workday going down, of course, Adobe going down. I look at your business, it doesn't really look like those guys. Yes, you analogize to ServiceNow, but more toward the way a platform is, not because you're based necessarily on a seat model.
We are not on the seat model at all. What? We are an infrastructure company, a data infrastructure company for AI, for cloud, for SaaS, and we are delivering security and AI automation.
Okay, at the same time, I want people to understand your progression of what your margins were last year at this time versus now, and your let's get your return, the ARR.
I mean, if you look at our business growth, we had tremendous business growth. I mean, we are growing 34% year over year ARR at 1.35 billion. And we generated 77 million of free cash flow, which is 22% cash flow margin. And if you just look at all of last year, we generated 22 million of cash. Just this past quarter, we generated 77 million of free cash flow. So we have done tremendous job in creating a top line growth because we are in a very, very large market while doing a disciplined execution to generate profitability and cash flow.
Well, look, I think it could be a case of mistaken identity, frankly, because I can tell if you go through that trajectory where you'll be, and people will probably say by that point, 6 months from now, wow, what a cheap stock. Because that's the way it works in this market. I want to thank Bipul Sinha, the co-founder, chairman, and CEO of Rubrik. It is not a seat model. I repeat that. It's important. Mad Money's back after the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next.
It is time. Talk to the lightning round. Tremendous. Our rep goes on to see myself. Just the good no course. Not quite. My staff prepares the clever super. You play this out. And then the lightning round is over. Are you ready? Ski that time. Lightning round comes to start with Susie in California. Susie.
Oh, hi, Jim. Calling from the food bank in Fairfield, California. It's lovely and sunny. I'm calling about bank stocks. I have Capital One due to your recommendations. I'm looking at a small bank stock that's had a good half year. It's called SAN. What are your thoughts? And should I have two bank stocks?
Santander is terrific. By the way, my daughter works at the New Jersey Food Bank. You are doing the right thing, and so is she. I think that Santander is amazing. I think Anna Boutine is incredible. We recommend the stock since 3, and I'm redoubling my efforts to tell you to buy it right now. Let's go to Tim in New York. Tim.
What's up, Jim? Sorry about those Eagles, but I got a question about another stock that's beat down right now, and it's Datadog.
We're going to stay away from these enterprise software companies. They seem to be almost in free fall, and I don't need to break the fall. Let's go to Bill in Texas. Bill.
Booyah, Jim.
Booyah.
Bill from Texas here. Proud club member and a longtime student of yours. You the man.
Thank you, and I hope you'll be at the meeting next week. Let's go to work.
Yes, sir. I wanted to get your thoughts on a regional bank in the South. Origin Bank Corp.
That thing is a rocket ship. You are in a winner club member. You're a winner, and I think that you should stay in it. And if it pulls back, I would buy more. Let's go to Rick in Florida. Rick.
Jim, first time, long time club member. How are you?
I'm doing well. How about you?
Good, sir. My question is about Kava. I bought some in the 50s. Got a decent gain going. Should I continue to hold?
No. Kava's making a big move. It's just started. Look at Yum today. Look at Texas Roadhouse today. Look at that group. Kava is good. It was making me look bad in how to make money in any market, but that's no longer the case. Kava is a buy. Let's go to Joe in Washington. Joe.
Hey, Cramer. Booyah to you. I have a little company I bought about within the last 90 days. I'm up 40%. Royal Gold.
Yeah, I know that's Royal. It's like Franco-Nevada. It's a very, very good company. Now, the problem is that kind of money being made that fast with it hitting an all-time high today makes me say, time to schnitzel. I want you to take a little off the table tomorrow. You'll never regret it, I promise. Okay, let's go to Scott in Tennessee. Scott.
Hey, Jim. We've discussed Marvell buying Celestial AI for $3 billion. That's a big validation for optical interconnects. Here's the point. Poet Technologies. They're the verified supplier building the light engines inside Celestial Tech. So, with a $300 million cash war chest, what's your take on Poet Technologies?
I'm not a poet, and I don't know it. Have to come back. What can I say? Let's go to Ken in California. Ken.
Hey, Jim. Autodesk.
Yeah, what the heck? This is another one. Look, this is enterprise software. No one wants to touch these companies. It doesn't even matter if it's for architects. No one wants to touch. These are toxic, okay? These are toxic, and we're going to stay away from the love canal that is enterprise software. And that, ladies and gentlemen, conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Coming up, after more strong earnings from Goldman Sachs and Morgan Stanley, Cramer is giving a lesson from his own history with those firms to help guide your present. next.
Booyah, Jim. Your integrity makes you the booyah saint of Wall Street.
Booyah, Jimmy Chill.
Booyah, Jimmy Chill.
Booyah, Jim.
Quadruple. That's a lot of booyahs. I found myself waxing nostalgic today, going back to 1982, when I was a young kid at Harvard Law School, angling for a job more suited for the students across the Charles at the business school. I wanted a job at Goldman Sachs because I was a demon for research about stocks, and the more I read about Goldman, the more I realized working there could change my life. Of course, I was immediately turned down. I wasn't up to snuff, didn't understand the balance sheet or the income statement, didn't know how to use the HP-12C calculator one day obviated by Google. I didn't know how to carry myself, how to dress. Maybe it was that Marshall's corduroy suit with the button-down sans cufflinks. And I didn't know how to eat or talk the way gentlemen instinctively know how. So I went about I learned these things. I studied How to Win Friends and Influence People, the 1936 classic by Dale Carnegie. I worked on diction. I went to a wondrous place called Mo Ginsburg for my clothes, a pipe rack warehouse with suits that you couldn't tell from Brooks Brothers. I took a corporate finance class. I took a year of accounting. And when I reapplied, I was immediately rejected. Why? Well, this was Goldman Sachs, for heaven's sake, and I still wasn't good enough. I was told not to come back, which I immediately responded by saying that I'll take that as a maybe. They told me a no means a no. So I redoubled my efforts. It's like a variant on that old Groucho Marx line. I refused to join any club that would have me as a member. I figured if Goldman didn't want me this badly, the place must be incredible. So soon after, I told the person who'd given me the solid no that I was in New York for Christmas break. I wanted to stop by. The naysayer said, sure, see you at 11. I got there. His assistant said, just go into this little closet-like space, and someone would be with me, be soon by to interview me. I said, terrific. 6 hours later, I popped out to see when they would meet me, but no one was there. Everyone had gone home. That intrigued me. So I came back soon after saying that I think I was overlooked. A new person intervened and said, no, they were just trying to send me a message that I obviously didn't get. So I played my only card. I said that I knew every stock, every one, and I'm willing to describe it, tell you what price it was selling at, and what should be done with it. I said that if I failed, I'd never bother them again. Well, they took their turn one after another after another. To me, it felt like batter's practice. I don't think I sent maybe a couple to the lower deck. Most went to the upper deck, except for the ones that broke car windows outside the stadium. No fly balls, just home runs. At that point, the biggest naysayer told me that I'd gotten my foot in the door. But they'd slam the door on my foot unless I could get a job offer at the other iconic investment bank, Morgan Stanley. So I started that process, crashed cocktail parties, used the alumni network, waited outside with my Mo Ginsburg suit, and said I knew syndicate work, underwritings. Somehow, after many meetings with pretty senior people, I got close to an offer. With my gossamer break at Morgan, I went back to Goldman. And I got a summer offer. It was 1983 by then. A year and a half went by. Fine with me. I got a full-time offer at the end of the summer and even started doing some work for him before I graduated. Now, why do I tell this story? Because these places still have incredibly high standards all these years later, which is why the buyers should stop clowning around and finally realize that their stocks are worth much more than they're trading for, even at today's rallies, and they should be taking all offers. Today, Morgan Stanley and Goldman Sachs reported fantastic numbers, as they almost always do. Their stocks were up 5.78% and 4.6% respectively. Yet even after these romps, they still traded at a ridiculously low 17 times earnings. Insane! These are not some episodic roller coaster firms. They're solid, granite, tungsten even. Yet they sell at multiples far lower than Colgate or Procter & Gamble, toothpaste, or just the average stock in the S&P 500. That's farcical. However, I think the investment banks are finally starting to get their due, and this is just the beginning, people. I'll tell you when it's too late to buy, but for now, we're definitely not there yet. They will go much higher, and I think, from my history, deservedly so. I like to say, as always, bull market summary, promise I'm just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC or its parent company or affiliates and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.